Welcome to FutureX, the podcast where we look to solve the variable that is the future of Web3. Every week, we'll talk with some of the brightest minds in the blockchain and Web3 space, from top investors to founders and builders, paving the way for a decentralized world. So what is the future of blockchain? What will Web3 look like in 2050? Let's explore together.
Hey everyone, thanks for being here today. We have Justin Huang, founder of Asymmetries Technologies. Justin, can you give us a quick intro on who you are and what your company is?
Okay, thank you. Thank you so much for having us or having me here. My name is Justin Huang. My Chinese name is Jizhou Huang. I'm the founder of Asymmetries Technologies, and I'm also an algorithm trader and full-time developer in Asymmetries. Asymmetries is algorithm trading. Is fully technology-driven trading company in Asia. It is an asset management company. It also a market maker for DeFi and CeFi. And currently our focus is on DeFi, liquidity providing, and also a lot of trading opportunities there.
So tell me about how you got into the crypto space before we jump into some of the details around market making and what your firm does. What was your introduction into crypto?
I would say it's 2017, but I didn't come to this industry that early because I witnessed a lot of a few of friends of mine. They have a huge success in this industry, and I see because as a trader we always want to trade in the market has a lot of volatility. So we think that crypto is a very good asset or underlying for us to trade. That's why I got into this industry in 2018, and I established my company in 2019.
Is there any reason you waited, like you got in specifically at 2018? Because I think that was right after the ICO boom, right?
Yeah, when we got into the industry, it's I would say the volatility is very low, and it's definitely a bear market, and a lot of people just lose confidence, and so do I. So because we see the market, the volatility is damping dramatically. I think the market will never come back, but it come back. So it's fortunately we stay in this industry for a while.
Got it. So can you tell me a little more about how your firm works with different players in the space, like the CeFi and DeFi exchanges?
Okay, so at the very beginning, we were only doing the Delta One trading. So we manage a lot of institutions, their asset. We have like 4 to 5 very reliable partners in this group. They're all tier 1 crypto financial institution. And since 2021, because volatility becomes lower again, and we start to realize that the DeFi is going to be the future. So we start to work with a lot of protocol. And back to 2021, I also invested in some protocol, including SynFutures, and thanks for me. We help them to make market inside of their exchanges. Also, just give them some advice how to list your tokens in exchanges without sacrifice too much. And also we trying to come up some structured product for them to hedge potential risk.
Got it. Would you say there's like a difference? Well, you know what? Let me back that up a bit. Maybe for some of the audience members who may not be familiar, can you give us a little summary of what market making is?
Yeah, the market making basically is provide liquidity. So for a taker or any participant in the market, if they just want to take the trade, they will see smaller snippage in the market. The reason why they can get smaller snippage because the market makers provide enough depth and size in the market. In terms of depth and size, because this is the criterion for the liquidity quality and also the uptime. So this is basically what market makers do. And because the DeFi's come in, the landscape has a little bit is shaped, because like AMM, it's more like a passive liquidity. So people will say, oh well, we don't need any professional market makers anymore in AMM. But the truth is that like AMM, like a V3 type of AMM, Uniswap V3 type of AMM, the people need, or the market need, a concentrated liquidity, which will become liquidity will become more efficiency in the market, and people just put less capital and make the market depth much better for the retail traders. So this is what basically market making in this industry. Yeah.
Got it. And is there, what are some of the nuances or the differences between working with CeFi and DeFi? I mean, obviously there's a big difference between market making for order book versus AMM, which some of what you touched on. But can you tell us maybe some of the other differences in market making on CeFi versus DeFi?
Sure. There is a lot of nuances and a lot of differences between the CeFi and the DeFi market makings. For when we're talking about a DeFi, we are talking to two categories. One is cloud, which is also the old book, something like YDX injective, and also something like AMM, which is SynFutures, Uniswap type of DeFi protocol. If we compare the cloud, the DeFi, the decentralized changes cloud versus centralized changes old book, they're quite the same. But the difference is that you need to familiar with what is a blockchain and like the latency and how your trades can get confirmed. And there is too many differences, to be honest, because the market makes they need to change their parameters a lot. And and also in terms of participant in the right now, the retail people is still focused on the central exchanges. So a lot of old flow in Web3 or in decentralized exchanges, they are still from institution or arbitrager. So this is a huge differences. And also when we are talking about the AMM, because this is more like a passive liquidity providing. So when we are talking about the market making in central exchanges and how people can mitigate their risk, mitigate the risk for the market makers, they use their dynamic hedging or hedging versus another instrument, or hedge across exchanges. And B, they use some structured product, same as the DeFi AMM. So for the market makers, they always need to they need to hedge versus central exchanges across different DeFi exchanges, or they need to use some structured product, especially like call spread or put spread to hedge their position.
Got it. Would you say for your firm, most of your activity is still in maybe CeFi and then DeFi order book models? Or just because, we speak to a lot of market makers and the general consensus is they're not crazy about AMM because, like you mentioned, it's passive liquidity management.
We are totally different. We are very crazy about passive AMM because, a lot of protocol, like for example, like Sui, and maybe some layer 2 in the futures, when the gas fee is much lower and the efficiency is much higher, potentially the passive liquidity providing could become very active liquidity providing services. And also, we think that AMM model is very good for the long tail asset, because there are two kind of asset. One is like major coins or very big asset like BTC, ETH, it's global asset. So a lot of people, they hold this asset. And another stuff is about like project tokens, because not a lot of people, they have this stuff. And the AMM is encourage, they encourage different participants in the market. The most significant difference is they encourage the retail people to put their chips on the table or on the AMM, in the AMM, and the reason why the how they incentive the retail people is that because they do the liquidity mining. It's basically like the great trading in the central exchanges. But the retail people, they don't have the capability to design algorithm for the great trading. But in the end, they do. And another stuff is that if the project they encourage retail people to put their chips, and it will prevent the retail people from selling their tokens immediately. So it will help the project. And I think that is very good. Another stuff is that because a lot of projects, they hire designated market makers to provide liquidity in central exchanges and to protect them from the impairment loss or give them some rewards. They always give them some options, right? Like call options to protect them and reward them. But the KPI is still an issue. If I give you like 3% option token and 3% option loan, so how can you convince me it is worth to do that stuff? It's a tricky questions. But for a lot of for the project, if they give the AMM or they implement some, they put some liquidity in the AMM, and the impairment loss is calculated, can be calculated, and the market makers can be two type of market makers in the AM. One is they hire someone to create some very concentrated liquidity, for example, like 2-tick spacing, 3-tick spacing liquidity, and another one is they can use this liquidity, which is in the AMM, to bridge liquidity between the DeFi and the CeFi. So you don't need to pay a lot of options to the project, to the market makers, but you can guarantee the quality because you put a sizable liquidity in the decentralized exchanges, and people will not ask for much more options allocations, or rewarding to the market maker. Yeah.
Got it. So it sounds like you guys work with a number of DEXs already. You guys also work directly with projects, with like token
Yeah.
projects?
We work with token project indirectly. It's through the
Indirectly.
through the introduction of a DEX.
Got it. How do you guys choose, the partners that you work with? What are some of the qualities and the, what are some of the considerations that you guys take when choosing the right partner?
You mean the decentralized exchanges or
Yeah,
the
yeah,
project?
yeah. Is it
Um,
mostly just based on liquidity, and the depth of the DEX, or are there some other more kind of nuanced factors that you guys look at?
uh, Actually, we are looking for. I think the criterion is so first of all, they need to they first of all they need these services, or they have a huge
Yeah,
demand for it. And some exchanges or some DEXs, they just they come out. They don't have any plan for the liquidity incentive. So this is not our target. We need someone. They need to say, okay, we have like, for example, we will allocate 5% of our tokens in the next 5 years to incentive our market makers to do, A, B, C, and D. So we like this protocol. So they know their KPI in the
mhm,
for 5 years. And the second one is we want people with integrity and honest. So some people they just will say, okay, please participate in our liquidity providing, but you need to buy some tokens or our project. So sometimes this is not very good because they can easily cancel the policy. They just withdraw the policy and say, okay, you cannot enjoy the fees rebate anymore. So we want some project that have a long-term goal and they are extremely honest. Yeah.
right. Got it. And you guys also make investments into early stage projects. What are some of the things you look for in, potential portfolio companies?
We like DeFi because we start to trade the DeFi. Because we think this will give us more edge to trade. This first thing. The second thing is we want something is more close to traditional finance. First of all, we are very good. We are very um, we have very good. We see something that have very bright future. For example, like passive investment company in the on-chain product. Oh, you using on-chain product, and also we think that some trading laws in on-chain trading laws, we think this will also have they also have very good future. So we want to invest something like this. And another stuff is, some very hot topic recently is RWA, real world asset. Yeah, I think they also have a very good future. But the question is where to get the asset. This is a good part, a very tricky part.
Yeah. So you guys make investments in dApps and protocols that you guys will use yourselves.
Yes, most likely. Yes.
Yeah, yeah. Do you guys also make like infrastructure investments, like DeFi infrastructure that maybe you won't directly use, but could be used within the broader DeFi ecosystem?
Yeah, we because we don't have right now we don't have we know some DeFi infrastructure is very important, like wallet,
Yeah.
like MP wallet, but maybe the check size is too big for them, for us. And also there is another issue is that we think they still have for us it's just it's a little bit far away. It's not like we can use their services or we can be a security partner directly. Yeah, and also they're also trying to figure out what's how they can make income or make money.
Yeah, that's I think that's an important one that not enough Web3 projects think about, right? How are you going to monetize ultimately?
Yeah. I think this is a very Web2 mindset, because you need to attract flows. So how you attract flows, you need to pay for the flows. But is that a long term or this is just very short term because you pay and the flows come in? I think this is a lot of tricky question here. For the wallet, they needed to build up a huge ecosystem for them. So this is a very big project, I think. Yeah.
Yeah. Changing kind of topic a bit to touch on some of the regulatory environment, because that's always, a hot topic these days. There's been, I think over the last year or so, there's been a shift where we've seen friendlier, maybe not friendlier, but more regulatory clarity coming out of Asia, right? What are your thoughts as a market maker that's active in the DeFi space? Because I know on one hand, Asia is opening up to digital assets, but more so on the centralized side, right? On the DeFi side, I think there's still a lot of ambiguity. Hong Kong has called for DeFi to be regulated just like a CeFi. What are your thoughts on the current regulatory environment?
First of all, we are very bullish on Hong Kong, their regulations. I think they have the attitude to make this happen, and because A, B, C, and different reasons, and like you said, we as market makers or traders in Asia, we are also very concerned about if there is mass adoption of AMM or Web3 type of trading. So my thinking is that for some scenarios, for example, if people the majority of the participant, for example, like a GameFi, if there is a very good GameFi product, and the original user they just get used to the like DeFi trading, or because they swap their tokens for another tokens or for another instrument. I think that there is some scenarios for the adoption of AM. Another thing is that for some asset, if the liquidity providing in the central exchanges is not that easy. For example, if people issue a fund product, this is a real estate, real related product, and there is no one to do the market makings for this project or for its fund shares. And like Arsenal, like we know, because for the market making, the market making for a project, the market makers always need discounted uh, tokens or
Mm,
some offers, something like call options. But if there is if the market makers they are making market for some product that has no um, discounted shares, or they cannot get any options to against the upside risk. So probably like AMM is the best choice because the AMM is much it's very this is like a very open finance uh, environment. Any retail people can come in and deploy liquidity. Maybe something professional market makers they hesitate to do so, but for retail people they are willing to do so.
mm,
This is our take. Yeah.
got it. What about what are your thoughts on the new ETF filings from, BlackRock, Valkyrie? Do you think do you think it sounds like the industry is leaning towards, yes, it'll be approved eventually, right, by the SEC. Do you think it's going to have a big boon to the market? Or do you think, it's still kind of early where just because the ETF is available doesn't mean it's going to see a lot of activity right away, right?
Yeah, I think this is a good sign. If the ETF is it got approved, I think this is a good sign for worldwide. Every every single people, especially like young people, they will realize that okay, this era is coming, and Web3 is the future of the world, like AI. I think this is going to be a very good sign, and it will incur mass adoption of Web3 technology.
Yeah, I do agree with you that it brings a lot of credibility to the asset class, right?
Yes,
Where I think the average kind of person is still on the sidelines right now. I think in the
yes,
last bull cycle, what we saw was a lot of adoption driven by hype, right? Driven by, outsized returns. But in the next cycle, might be a more hopefully we see a more sustainable run.
yeah. Yeah, when we interview people or people from different colleges, um, including mainland college and Hong Kong colleges, the young people they still don't have any faith in crypto, or they just barely touch this topic. Still, there is a long way to go.
Yeah, completely agree. Um, what do you think are some of the biggest challenges ahead for DeFi and digital assets?
Um, I cannot say where is the biggest changes. I just my 2 cents. I think the most the biggest issue is so for the asset for the digital currency, what's the value? So the valuation is the biggest issues. So that's
Yeah,
why we very bullish on RWA because this is real something. Um, and the second thing is, who is the user and what is the portrait of the user for the DeFi product? Like who is the user? And we cannot rely on the user who just trying to take advantage of a project. Does how many of the users they are real or they are really using this product? So this is another questions. And another thing is about the regulations. I think so. Regulation is a big issue because maybe in the future the Web3 is they have like local Web3 and a global Web3, like two different part of Web3s
hmm
and two different categories of Web3s. The level exist simultaneously.
yeah. That's an interesting point because these days I think a lot about how we're seeing a return to nationalism, right? We had, in the last 2 decades, we had this big push for globalization, but in the last few years, we see more and more countries kind of close up some of their borders to innovation, right? We see this in AI right now, where everyone's taking a very nationalistic approach, and I do wonder if that's the route we're headed for Web3, right? Although it's supposed to be completely decentralized, we still have these some borders within decentralization as nations or as regions try to protect their interests.
Yeah, yeah. I think it depends for a lot of countries like South Africa, like Africa and the South Americans. They really like cryptocurrencies because it will help them to fight against the inflation and the volatility of their domestic currency volatility. I think it's very good. But for some currencies very stable like China and and American, this is another case. So Web3 will give them like more GDP and more economic growth for them.
Hmm.
I think this is totally another story.
Yeah, yeah, it's definitely interesting. When I look at Argentina, Turkey, where there's huge currency risk. We see the appeal for the end user of why they would want access to stables or digital assets. But
Yeah,
if you think of it from the people in charge, they still want to enforce strict capital controls, and digital assets are sometimes a way to skirt those restrictions. So it's a
right.
very like it's a fine line, right?
Right. And the quick, like especially like I said before, RWA can help a lot of people like in Africa and South America. They can buy the asset, to maybe they even have the chance to compete the global inflation or the global growth. So this is very good for them, I think.
Yeah, absolutely. Okay, so that brings us to the last portion of our interview. Would love to get your thoughts on a couple things. So first, we're in a bearish market right now, right? Many projects have been focusing on building and product development. They say this is the builder's market. As the market begins to turn, what is your team focused on when it comes to some of the market activity and some of the investments you guys make?
We think that we are still a long way to go. I would say like the bear market has gone uh, almost like 2/3. Um, in the first 2/3, I think our main focus is on the building, especially we educate ourselves how to provide liquidity in the AMM and how to use this liquidity to help a project. I think the rest will educate the market, and also we'll need to find very good examples to demonstrate the liquidity providing services is more economic and more efficient. So this is our task. Um, another thing is that we are very bullish on on-chain asset management product. We are trying to build on this VOS to help retail people to they can just create their VOS to participate in the market, especially like liquidity mining VOS. It will
Mhm.
help the market makers. It will help the retail people. It will also help the project. It will also help the DEXs. So I think this is a win-win product. Um, yeah, this is what we are trying to do. Yeah.
And are there any specific sectors within DeFi that you're especially excited about? I know you mentioned RWAs, right? Real world assets. Even within RWAs, is there like a specific asset class you think has the most promise, whether it be, traditional stocks, bonds, real estate?
Yeah, in terms of sector, I'm still very bullish on AMM. I think the adoption of AMM or the mass adoption of AMM still a long way to go. And because people they don't know the methodology and what's the value or what's the intrinsic value of AMM, so the AMM will finally, I think it will replace central exchanges in some assets. Yes.
Okay, got it. Um, what are your thoughts on, I meant to touch on this earlier. What are your thoughts on Uniswap V4 and their, hooks?
I think it is very institution friendly. It's not
Institution,
retail.
right?
Yeah, it's not retail friendly. I think it's redundant. They don't need to create this hook. To be honest, I think so.
Got it. Um, do you guys plan to actively market make on Uniswap V4?
It will see. It will see. What kind of asset will be there. I think this is also very asset driven. Another thing is about uh, the the target we are choosing for the liquidity providing is we consider the following factors. One is the gas fee. We don't want very high gas fees for trading because and also we are very afraid of like MEV type of stuff because it will we if we are doing so or we are trying to prevent this stuff, we need to do a lot of infrastructure to prevent this stuff. We think we are very good. We very like blockchain like three because it's fast, it's efficient, and there is no issue like I just mentioned.
Got it. Now, as a final question, so let's say we see the mainstream adoption of AMMs and DeFi in general. What do you think the breakdown would look like between like institutional supervised liquidity versus retail? Because I think the whole concept of DeFi is making it more accessible not only to institutions but also to your average retail user. But I think in reality, a lot of retail users may not actively participate as definitely not as much as institutional. So what do you think that kind of breakdown looks like in the future?
Yeah, it's very like traditional finance. Even like institution, there are two kind of institution. One is a speed driven institution, like high frequency trading shop.
Mhm.
One is like more maybe one is more like asset management company, like traditional asset management company. And even for the institution, when they participate in AM, they always have two goals. One is they use this stuff to create like a synthetic structure product. Basically, they short the volatility. The second one is, they just have some market opening, and then they say, okay, when our liquidity is here, it's most likely we can make money. So I think this is much more like a retail people.
Got it.
And
Great.
the people, we cannot say who is the loser or who is the winner in this game. Even the retail people, we cannot say they are the loser. Even there is a lot of institution here, because they they put some TVL in the ecosystem, and maybe at most, if they're sophisticated enough, they can make like 20% more, but they don't have the capability to be very active, to do the active management. So maybe another 20% is taken over by institution because they pay the services.
Got
Pay
it.
for the services.
Yeah. All right. I think that brings us to the end of the session. Is there anything that you'd like to share with the audience about yourself, your firm, or any thoughts on the market?
Yeah, I think that right now it's very interesting. To be honest, I think it's much more interesting than 2019, where I came into this industry and established my company. And there is a lot of thing. There is a lot of changing down the road. Like last year, a lot of institutions are just falling down, and I cannot say that when the big institution come in, it will take over like a lot of small companies. The real beauty of the Web3 is that everybody or every institution, they always have their chance to survive in the market, because we have some reasons to do that, to prove that stuff. Because a lot of and another thing is that if the product they really want to gain the flows in the market, it's it's gonna be very fierce, and it's gonna be very tough for them because it's very web 2 mindset. Yeah.
Got it.
And the market making, in terms of market making, I think even blockchain, not to be honest, from our point of view, even blockchain is not the most innovative, but we think that AMM is very innovative. I know a lot of central bank that are trying to do the experiment using a curve type of AMM to do the currency settlement with different countries. So I think this is a very big innovation in this industry, and this brings a value to traditional finance. Yeah.
Got it. Well, Justin, thanks so much for being here. Thanks for sharing your insights with us.
Thank
And
you.
I know we'll keep in touch. So thank you again.
Thank you. Thank you so much. Thank you, Mark.
Thanks for listening to the FutureX podcast. Subscribe on Spotify or wherever you're listening to this episode.